Yeah, so I'll simply just put the whole thing on record so I can send it to you after the lectures.
Power up.
Now, we have this as our market chart. You get, so this is our market chart, and we get to analyze this chart to be able to understand where the market is going at a particular point in time. Now, this particular market chart is very helpful to us, but then there is something that happens. Each of all these things you can see is what we call a bullish and a bearish candlestick. It's what is constituted in this particular area. Are you with me? Can you hear me?
Yes.
Yeah, so each of these candlesticks, they are
Yes, I can hear
basically,
you.
yeah, so each of these candlesticks you can see here, each of them are constituted by bullish and bearish candlesticks. You understand? Now, how does the bullish candlestick form? Now, let me show you something. Now, I want to use the current market price so that you are able to understand something better. Now, this was yesterday. So, this was yesterday. Every 1 o'clock, a new candlestick opens. You get? Every one
Yes.
o'clock, a new candlestick will open on this volatility indices section. Now, if you look at it again here, we'll come here. This is 1 o'clock. That's why you can see that a new candlestick has just opened, which is this one.
Sir,
Yes,
sir.
yes, I can hear you.
Wait, sir. Can you hear me?
I can hear you clearly. Go on with your question.
Yes.
Yes, I say you can go.
Please, um, record it, please. Record it. Record
Yeah,
it because I can't hear you. Record it. I can't hear you, but you're breaking. You're breaking.
I can hear you clearly and it's on record.
Okay, because I can't hear you clearly and you are breaking. So it's kind of hard for me to understand what you're saying at some point.
Yeah, but anything you don't understand, do well to ask me the question until you get it.
Okay.
Yeah, so now, what did I say? I said we have what we call bullish and bearish candlesticks. Now, all these red candlesticks you can see on this chart, they are called bearish candlesticks. While all of the green candlesticks are called bullish candlesticks. Now, what is a bullish candlestick and what is a bearish candlestick? A bullish candlestick basically is when this particular candlestick, for instance, like for the bullish candlestick, is when it opens at the bottom and closes at the top. You understand? Leaving wicks, which is a price behind. So a bullish candlestick opens at the bottom and closes at the top. Now, for a bearish candlestick, which is like all of these bearish candlesticks here. Now, this open and close is simply saying within the day that this candlestick was open, each of these day. So a bullish candlestick within the day period of these candlesticks, it opened at the bottom and it closed at the top between 1 o'clock till the next 1 o'clock. I don't know if you are getting my point.
I understand.
So we are simply saying that, let's say for instance, now let's take for instance this current 1 hour candlestick. I mean this current daily candlestick. So the daily candlestick opened from the bottom here. Let me make it wider so that we can get the message. I just want to make sure you understand every bit of it. Now, the daily candlestick opens from this bottom here and it closes at the top here, leaving wicks behind. So this is where it opened. This is where the daily candlestick closed. But the only message now left is that between this point where it opened and this point where it closed, this particular price you can see here was the lowest point price got to. this particular price was the lowest point market price got to for this particular day candlestick. Now, this one at the top was the highest point, which is highest price market got to. So this information is very helpful because it will help us to be able to understand the difference between these particular candlesticks, ranging from the lowest point price got to and the highest point price got to. Now, the bullish candlestick opens at the bottom and closes at the top, just like I've explained, and bearish leaving wicks behind, which is this wick at the bottom and at the top. While for a bearish candlestick does an inverse of this particular action I just explained here. So a bearish candlestick does this. A bearish candlestick opens at the top and then it closes at the bottom, leaving wicks behind. So you'll see leaving wicks, the wick. Oh, sorry. Let's see. let me delete. Let me delete this guy. So let me try it again. So a bearish candlestick opens at the top. I'm trying to pick a wick here. I don't know why it's not letting me. Well, you understand the message. So a bearish candlestick basically opens at the bottom. Sorry, it opens at the top and closes at the bottom. That's for a bearish candlestick. So this is the inscription here. It opens like this for this bearish candlestick of this day. It opened at this top here, which means price at the beginning, which was 1 o'clock, just like what is happening here now, means that price at 1 o'clock opened here, and at the end of that 1 o'clock the following day, it closed at this point here. But then during that particular time of the 1 o'clock, you see that at the bottom here you can see a little wick. That was the lowest point price got to. While at the top you can see a little wick at the top. That was the highest point price got to. So if you should see this one at the bottom here, you will see that there was a wick. There's a wick at the bottom here. So that was basically the lowest point price got to. So that is just to give you an inscription of what market is, you understand, in terms of what a bullish candlestick is, how it opens and how it closes. Now, with that definition, you are able to understand why we can call any of these candlestick a bearish candlestick and why it is called a bullish candlestick. And my question goes to you: why is it called a bullish candlestick or a bearish candlestick, based on what I've explained? Yes, I'm with you. Can you hear me?
Yes, I can hear you.
Yeah, so why is a candlestick called a bullish candlestick and why is a candlestick called a bearish candlestick?
Why is it what?
I say, why is a candlestick called a bullish candlestick and why is it also called a bearish candlestick? What are the components that make a candlestick bullish or makes it bearish?
If the candlestick is going down, it's bearish. If it's going up, it's bullish.
No, that is wrong. From what I explained to you, that is wrong. What are the properties of a bearish candlestick and what are the properties of a bullish candlestick from what I just explained to you right now?
Sorry, please, we have to come again.
So please be very attentive with anything I'll be saying again so that you get it exactly. Because if you don't get it, we are not going we can't move
Okay, sir.
forward. So that's the thing with training someone or teaching. If you don't get every bit or every step of it, we cannot move forward. You understand?
Okay, sir.
So
Yes, sir.
now I said something. I said a bullish candlestick opens at the bottom of price, which means that this line you are seeing here, this red line, at the point where the bullish candlestick opens, it kind of relates with the bottom. You understand? All these bullish candlesticks, where they opened, where that is where this price was at the time of 1 o'clock, which signifies a new day of this daily candlestick, was that it was at the bottom here, for instance, for this bullish candlestick. And at the end of that 1 o'clock, at the end of that, it started this 1 o'clock from this bottom here. That's what it simply means. Then at the end of the 1 o'clock, it's closed at the top here. So that is how a bullish candlestick is being formed. A bullish candlestick opens at the bottom and closes at the top, leaving price weak behind. While for a bearish candlestick opens at the top and closes at the bottom, leaving price weak behind. You understand what I just explained?
So, sir, yes, sir. So,
So
sir,
explain it for me. Let me understand
bearish
now.
candlestick
Explain.
leaves wick downward.
Now, a
You said
bullish and
what
bearish candlestick, they
makes
leave the wick both at the top or at the bottom. It's not at a particular point.
no?
Do you understand what I'm saying?
Yes, I do.
For a
My
bullish,
question is
yeah,
my question is for a bearish candlestick, it's compulsory that the wick must be facing down, right? Or
no,
is not compulsory?
it's not compulsory. For a bearish candlestick, the wick can be facing either up or down. It may even have wick only above and not have below. It may have wick below and not have above. It is just signifying that during that particular time, like we are on the daily time frame, it is only signifying that during that particular time, that price got to either this point here, for instance, for this bullish candlestick. So it simply signifies that during this day, market price got down to this point, but then still pushed up again, got to this up, and then now it closed at this point here, giving us a bullish candlestick. Now for this one again, this bullish candlestick simply presents to us that during this particular day here, price got to this particular low, price got to this low during this candlestick, and then also rallied into this high, leaving wicks behind. You understand? So it opened at this point and closed here, but it left wick at the top and at the bottom. So it is not a must that market price will leave wicks at the top or at the bottom. It is just depends on how the price, which is the market, moved during that time. You get? So now this is
Okay, sir.
an example on the 24 hours time frame. So it simply means that after every 24 hours, a new candlestick will open. Now let us go to a 4 hours time frame candlestick now. So now on this 4 hours candlestick, this 4 hours simply tells us that market price reacts after every 4 hours. You understand? So what we understand here is this, that after every 4 hours on your time frame, you can simply just put your cursor, for instance, on this place, and then
Yes.
put your horizontal line again here. Now we put another horizontal line, so here. Now we want to calculate the 4 hours of each of these candlesticks. This is the current 4 hour, which can simply tell us, we'll see what will happen. So let's go to the 1 hour time frame to be able to divide each of these 4 hours and see what happened. Now on this particular time frame, you can now see what happened. You can see that on the first 4 hours, we had it from this point. It established the first candlestick, second candlestick, third, and the fourth candlestick, creating this 4 hours candlestick. Now, on the second one, we can see it established the first candlestick, the second one, the third one, and the fourth candlestick. Are you with me?
Yes.
Now, this establishment of these candlesticks, now on this next 4 hours, it is currently establishing.
So so Sir,
The first 1 hour candlestick. Yes,
sir.
I'm
Okay.
with you.
So these four candlestick now represent 4 hours, right?
So the four candlesticks I've explained now on 1 hour represent one 4 hour candlestick.
Represent okay. So in this 4 hour, this last four candlestick is it went up. So we said price went up, right?
No, we are not talking about whether the candlestick is going up, whether price is going up or coming down. So it's just established
Okay.
4 hours candlestick. So we're only saying from this point now to this point to this candlestick before this one, it simply tells us that that is a 4 hours candlestick, the past 4 hours. From this candlestick now to this one again, the past 4 hours. Now the current one is opening, so we need to see another four candlestick. After this one, we need to see another three candlestick to create the next 4 hours candlestick. Now, this information is very important, especially in our trading. Why? Because it helps us to be able to understand what the market is doing and the reaction of market price. Now, one thing you have to understand is after understanding how a candlestick opens and closes, it will now drive us to the next point, which is understanding how to take our trade in the market. Not even taking trade, understanding um, the uptrend of the market and the downtrend. You understand? So after understanding the candlesticks, we will now go to the next stage, which is understanding what an uptrend is and what a downtrend is. You understand? Before we begin to talk about market highs and market lows. So now, for instance, if we want to understand the trend, we'll go to the higher time frame. Now, on this particular time frame, what can we easily see? We can see that this market is not it's not actually an uptrend or a downtrend. Why? Because if you look at what market has been doing, it came down, went up, came down, went up, came down again. So what can you see now? If we should bring this out, you can see that it is not going up, it is not coming down, right? Is that what you can see?
Yes, yes.
If you look at all these moves that is made from this
But
point to this point,
from the starting, it went down.
yeah, from here it went down. So this whole move that went down is a downtrend. This whole move that went up is an uptrend. But all these uptrends and downtrends are on
Okay.
smaller time frame. But on the daily time frame, what can you see? That's why I said we have to do what we call top-down analysis. So on the daily time frame, you will clearly understand that we are seeing a ranging market. You understand? So on the daily time
Yes.
frame, what we can see is that market is not going above this point and market is not also going below this point. So that categorically tells us that we are clearly in a ranging market. But now if we now go to this 8 hours time frame, for instance, you will now see that during this time there was kind of market going to the downside here. So during this particular wave here, market actually was going to the downside. You understand? During this wave, market was going to the downside. This now is a downtrend. You understand? Why this?
Yes.
Yeah, some people can call this, you can call this an uptrend on a 1 hour time frame. You can also call it a market retracement. You understand? But then we cannot just mark a downtrend like this and also mark an uptrend. No, so it is just like a wave. This kind of move to the upside is basically an uptrend where you can see this is an uptrend. But now, how do we mark an uptrend? That is where the next question comes in. You understand? I just want you to understand that an uptrend is when you see markets moving up to the upside, and then when it's going down, it's a downtrend. But then, how do you know that it is going down, or how do you know it is going up? Now, for me to explain that, I have to show you something. Now, market does something. It does what we say. It creates a high and creates a kind of low, creates a new high, creates a low, creates a new high, creates a low, creates a new high. So it keeps doing it like this, it keeps repeating the process until this level. So this is an uptrend. All of these things you are seeing here, it's an uptrend. Are you with me? Can you hear me? So all of this market is doing here is an uptrend.
Yes.
And how do we call it? Why do we call it an uptrend? We call it an uptrend because price is actually creating lows. All these points at the bottom, like all these things you can see on the chart, replication of what I'm doing here is what you are seeing here. All these places you are seeing on the chart, they are called market lows. All these places, they are called market lows. You understand? The ones you can see at the bottom, they are called lows. All these places are lows. You understand? In our uptrend, all the points at the bottom are lows, while all these points at the top are called market highs. You understand? That is how you are able to understand an uptrend or a downtrend. Now, so you can see all these points here, they are called highs. You can see. So that is a replication of what I'm showing you here on chart. Now, let's delete this. Now, the next one is when we want to understand a downtrend. So now, a downtrend is when you see market doing this. This is a high. Then when it creates goes down, it becomes the lower and below it now becomes a low. Then this one that is not above this high will now become a lower high because it is lower than this previous high. Then when we go down, this now becomes a lower low because it's lower than this. Then this is also like a lower high. You understand? So it just begins to create lower highs, lower low, lower highs, lower low, lower highs, lower low. You get the message, right? So now this point now becomes a lower low, lower low, lower low, lower low, lower low. Why these areas becomes the lower high, the high, lower high, lower high, lower high, lower high, lower high, lower high. Now a replication of this you are seeing here is on this chart here. This is a high, this is a higher, a low, this is a lower high, lower low, lower high. This is also a lower high though. This is a lower low. This is also a lower low. This is a lower high, a lower low, a lower low, a lower high. You understand? So you can see that this same pattern you are seeing is how what is being replicated here. Are you with me?
Yes.
Yeah, so I will not go beyond this because if I go beyond this, it will get complicated. Now, just like what I've done for you is what I want you to go and replicate. The next lectures we'll be having is going to be we are going to be talking about trend, how to mark, connect those highs and how to connect the lows in order to understand the trend of the market. You understand? So I will not really get into that particular point. I will just we'll go through this normal, the basic section first of all. Let's understand the reaction of the market, then we can now move further to be able to get other things in check. Do you understand what I'm saying?
Okay.
Yeah, so I'll be ending the lectures and I'll be
Mm-hmm.
sending you the video immediately so that you can get it.
You said I should mark what?